Hi guys, the election in the US is around the corner. Crypto prices are maybe moving towards higher levels. We have a few interesting support levels in the crypto markets we shall examine. And after all, gold prices went actually to the upside, corrected a fair bit, but show some potential motivation to even rise somehow further. Looking at silver and gold, we have more to talk about in any case. So let's get going for our weekly outlook here for next week. Non-farm payrolls. This is also one of the stories, and let's start with the biggest news event this coming week on Friday. The NFP data is potentially shaping up markets, and with that, the US dollar as well. So there is further chances that obviously the greenback gears up some further momentum. Looking at it from this perspective, and let's move towards the Friday data, we have only 110,000, 111,000 newly created jobs in expectation. Whether this figure can be really overextended and could cause maybe the market motivation to rise further, then we could see that the US dollar is going to gear up steam somehow even further. Last week we examined this level here and we said, hey, the market might be ready to break higher. 108.35, 108.40 is the line in the sand, which could show us that the upside potential might be tested. However, and that's the question here right now, the market has not traded to be above those levels, and hence the downside potential might intensify. We might see that this level is not going to be tested, but instead the downside level would cause the market momentum to be negative again, causing the greenback to gear up steam. Let's open this fresh chart again here. We're trading on the weekly below the 50 moving average. We are dropping like it's thrown, dropping like it's hot. But we shall see whether the markets will actually continue to weaken. In my case, I might say it looks quite promising here with the US dollar's momentum. Look at the pound here, same story, weakening basically, and the recent couple of 3 weeks in a row did not give us any sort of positive impact. Here, the old term, old style trend lines, all the way now coinciding with the 50 moving average here, and that's the weekly chart, might actually give us a new line in the sand as a sort of support area, but the market keeps fading to lower price levels. Hence, obviously, the pressure in markets might continue. Looking at the Aussie, well, this is going to be the tricky situation. The Australian dollar, obviously, against the US dollar, against the greenback, trending weaker. The market is fading somehow, and the risk sentiment remains quite bad. The risk sentiment, equities are, and we'll take a look at this in a second, equities are quite shaky, and they might weaken even further. And with that market sentiment here, we might say there is no line in the sand here. This support level, that's from last week, been broken already, and the upside, this arrow we can delete as well, because the downside momentum might escalate further. Line in the sand would be here, this next supportive range here, and if the market is going to be ready to trade higher based on that level here, or on those levels, we might see that the downside potential could intensify, and the pressure in markets might increase. Aussie weakness have to do obviously with orders from China. Chinese ordering a lot of iron ore, among other stuff, basically commodities from Australia. If the demand keeps being lower, this has to do as well with the trading environment, physical trading, causing the Australian dollar to proceed to lower price levels, and that the impact for stock markets, where stocks and the indices are basically showing us that this is going to happen, could actually weaken further. Let's have a look. The S&P 500 currently on the way to weaken further. Last week there was on Friday another attempt to rise somehow further. Not gonna happen. This week ended basically in quite negative territory. However, the market remains in slightly positive market environment, candlestick patterns here right now. We have not been able to rise above the high, but we've also not really broken much to the downside. So there is chances that this market is going to basically weaken somehow in a way and causing some negative price sentiment potentially to continue. The question is though, if we're going to see prices going to weaken below the low points here. Back to that, S&P 500, the Dow Jones increasing its pressure even further. The Dow, ended this week quite bearish, and now when we are looking at it from this monthly charting pattern, will the month of October end in this negative price sentiment? Well, then we could see that the escalation to lower price levels might intensify even next month. And when looking at it from the NASDAQ perspective, that's the interesting part. Those markets which had been beaten previously now start to rise somehow further. However, the S&P continues to see and face further profit taking here as the market momentum is ongoing. And well, the NASDAQ might tell us that the upside or any breakout indeed is going to happen further, because this candlestick pattern here doesn't look overly bad, and instead could basically tell us that this coming week could kind of be quite positive and obviously kind of helping the market momentum to remain in a positive environment. What is happening with the crypto market? Cryptos, well, Bitcoin is going to basically tell us that the upside might not be limited, but instead the Bitcoin price could instead push itself to higher price levels, as we can observe here. Looking at the chart from Bitcoin right now, we see that the breakout line and the higher price levels are going to be tested here. That's exactly this level here, which was broken, and Bitcoin's price looks quite positive here. 70,000 in reach, 80,000 might be seen. So with that said, basically the crypto world in general and basically Bitcoin is going to rise further. Looking at Ether and Ethereum basically had not as much of a good run as Bitcoin did, but looking at it from the charting perspective, we can clearly see that the Ether market basically last week tested a new rising trend line. This line in the sand here is what was tested. The market kind of was able to break to higher levels based on this, potentially at least indicating this line in the sand. The supportive trend lines here are and have been tested, and now if they have been defended successfully, well, there is not much of a reason to believe that the market is not going to rise. Actually, it looks kind of quite positive, and the market momentum might intensify into positive territory as the market sentiment currently kind of is suggesting. Looking at XRP, Ripple, well, the ongoing court case, right? 125 million, the fine, which basically is being kind of at least, well, the company at least says we are going to fight against it, and that is being defended as well in terms of pricing levels, right? So we see rising trends have been defended. The market weakened, but not as much as previously anticipated. XRP might be able to rise somehow further. Let's build the trend line here. That's the long-term trend, and we are trading below the 50 moving average. That's basically this brown or gray line in the sand here, which keeps being in a sideways pattern. If we are not able, or if the market won't basically be able to break the high point here, well, then so be it. Ripple could cause weakening momentum, could cause the market to basically break lower. However, if the price is able to basically kind of supportively or positively support and cause the supportive trend to be established and causing this market to rise further, we could see that also Ripple is going to unfold further momentum, causing the upside potential to be and to remain positive. So however it goes, the stock markets are going to be interesting. Obviously they are quite shaky, and the crypto market might then participate from either bullish or bearish momentum in the equity sector. If not, we obviously have a bit of an issue. And both markets, the risk sentiment wise, a market environment might weaken further. Looking at gold prices, gold is, as we mentioned previously, about ready to break above the 2,750 area. The prices recently started to break above the high point again, and we are likely going to see another break to higher levels if we at least not break below the recent lower prices. Yeah, so if the gold price is able to break higher, well, then we could see also, or whether the US dollar is going to weaken, then we could see gold to break higher. The US election is potentially a game changer. Still a couple of weeks to go before we have a certain result. If Donald Trump wins, then basically we have the war in the Ukraine stopping. We don't know exactly. That's at least how he talked about it. But if he's not gonna win Oval Office, then Kamala Harris might vote and opt for the situation to be rather ongoing, as critics say. So the question remains on who is going to win the election. Currently, charting pattern-wise, it looks like a pretty clear breakout is going to be in the making. It's just this 2,750 resistance, this technical resistance area. If broken, well, upside momentum could continue, and the market momentum might kind of be ongoing, causing the positive sentiment to be positive and remaining positive again. Silver, another interesting chart, because the market was like through the roof basically a couple of trading weeks ago. Not that many basically. It was just a bit more than a week and a half ago before the market started to be extremely positive. Now we see in charts that there is some correction. The market is going to weaken somehow further. There is some candlestick pattern which could basically tell us that there's a turnaround candlestick pattern here. That's this one, which translates to further weakening prices here. Previous resistance potentially turning support. That's why we have the arrow here. 32.20, 32 whatsoever. Is that going to be the game changer where corrective price pattern then find a strong support with the market moving higher? I might say this is a pretty much a likelihood scenario which happens here in this market, depending on the dollar goes. But looking at the weekly chart, we have another issue in silver, that the weekly chart printed a bearish candlestick pattern. That bearish candlestick pattern might be one which is currently kind of acting as a strong resistance area, and this could be something which is about ready, or which is about to be one of the bigger reasons that the silver price could weaken further, causing the market momentum and the market sentiment to be kind of in opposite direction, depending on how the market goes. Dollar strength on Friday, non-farm payrolls, 111,000 newly created jobs are not that many. They could basically kind of be stronger or better than expected, causing the market to be positive. The US dollar is potentially able to gear up steam again, and that might be basically what is going to be the positive feedback which the greenback might get. The dollar index, on the other hand, is the next asset we like to examine here right now. The dollar index has recently found some strong resistance. Let's remove those trend lines here. The resistance area, and that's the one in a version of the 50 moving average, currently sideways. The market broke this range. Whoop, upside might continue. Let me draw this trend line here, and we still would, according to that one, have about toward movement or motivation towards the 105.50 area, where the upside could continue, and positive sentiment is going to be the case here, caused by dollar strength, caused by the current market sentiment. We have geopolitical tensions. We would have also a bit of a shift in basically the anti-risk sentiment, which could be that the US dollar is gearing up some positive feedback currently by safe haven motivation. Safe haven, as the US dollar is basically, as the US dollar is also being called. So that's another issue, and moving forward could be one as well before we head into the election, the US election around the 5th of November. Let's examine news events which we have this upcoming week. Well, there is a couple when looking at the economic calendar. Obviously, we have the ADP employment change figures which are coming out on Wednesday. They are being expected at 101,000. So we shall see whether these figures can kind of give market momentum some positive or negative feedback here. Looking at news events beforehand, we even have on Wednesday the CPI data from Australia. Will we see prices rising in Australia? Will this be one of the chances that the Australian dollar, the Aussie as it's called, pushes momentum towards higher levels? Could be the case. The quarterly and yearly figures are going to be at lower ranges, the lower price ranges here. Looking at the quarterly data, obviously we've seen that prices were basically rising somehow. So let's see if this is going to be the case somehow further, or whether the downside momentum as expected going to happen here. Obviously inflation at times, the times of rising inflation at least, seem to be something from yesterday or the couple of months in the past, and it seems like at least those figures might remain negative here. But nevertheless, if they turn out as expected, this could be something interesting here to offer trading opportunities in regards to the Australian dollar moving forward. The biggest other topic for the week should be would come from Japan. We have the policy rate. Will rates remain at the or below the 0.25 percentage point? Well, potentially that's going to be the case, depending on how the policy outcome and how the government forming is going to choose the potential motivation. However, the Bank of Japan in itself might cause the dollar against the Japanese yen to move quite interestingly towards higher or lower levels. Looking at it from this market here, we see that the dollar Japi has secretly moved again to the upside here. Not that much, but over the recent couple of odd trading weeks, there was some upside, and now we see that the market might be ready for some upside momentum, which could be something that the market motivation is going to lead towards the upside even further. We've broken through that important weekly charting 50 moving average, right? So the 50 was broken, and the 50 here now could indicate that the upside is kind of ready to form further momentum here. However, we have some recent support, we have some recent resistance, we are trading above the resistance. So the question is on how much momentum will the market offer, how much sentiment will we see here in this market. At the moment it looks at least like that the dollar against the Japi is moving on further to the upside, similarly to the pound, Japi, and all the other markets. They all look like being quite positive as the Japanese yen's weakness seems to be ongoing without end in sight whatsoever at the moment. Looking at oil, well, the oil market, geopolitical tensions. We had some quieter times as of recently. Well, we had some retaliation. We had the Hezbollah. We had basically also some retaliation from Israel, and geopolitical tensions remained at par, we might say. So looking at the oil chart, it seems to be more the demand from the economy, and then even further what is going on with the geopolitical tensions kind of in terms of potential further threats moving on towards higher price levels. At the moment, we might say the upside is limited as the market kind of ended last week quite bearish. Even this week was ended quite bearish, and that alone is some idea which takes us towards the monthly chart, or towards focusing on the monthly chart. 50 moving average kind of extended by myself here, this blue line sideways pattern. Upside at least only might happen above the 78.50 area. Downside might happen below this 67.20 area. So there is still some room to lower price levels, and definitely the demand side from the economy seems to be what's the driving factor here behind this market. And basically as well, if we're looking at OPEC Plus, they have increased output figures, so there's not too much to be expected unless any new attack, any new geopolitical tension-wise attack in this hemisphere in the Middle East is going to happen. Then obviously some short-term breaks to the upside might occur, featuring the downside momentum and the current motivation looking kind of bound towards lower price levels. Guys, on this nutshell, I'd like to call it a session. It was a bit of a later one here on Sunday. I wish you a happy trading week ahead. Kind of keep in focus what the NFP data on Friday is going to potentially offer us here. That's the number one indication here. Geopolitical tensions. Number two, geopolitical tensions. Gold prices. We examined about that as well. And what we want to focus on as well is what comes from Japan in terms of their interest rate moving forward. Happy trading. Talk to you soon. Have a good one, guys, and looking forward to see you later. Take care. Bye bye.